Program is brought to you by realestate.com.au. With more homes for sale than anywhere else, realestate.com.au is Australia's #1 address in property.
Welcome back. We're set for the busiest weekend of the year with 3,601 homes scheduled for auction. This is going to be the highest number of homes auctioned in a single week for over 18 months, and it's 60% higher compared to the same week last year. There are 1,176 auctions scheduled to take place in New South Wales, with about 1,000 in Sydney. Victoria will host 1,700 auctions, with only 53 of them outside of Melbourne. Queensland will hold 367 auctions, with 145 of them in regional areas. South Australia will host 181 auctions, with virtually all of them in Adelaide. Western Australia, Tasmania and the Northern Territory will hold 26 auctions between them. And in the ACT, there will be 151 auctions there. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 11 Davies Street, Chatswood. This three-bedder sits on about 450 square metres. It has a price guide of $1.9 million. In Victoria, the top property is located at 1365 to 1367 Mount Dandenong Tourist Road in Mount Dandenong. This home was damaged by storms. Asking price starts at about $450,000. In Queensland, you might recognise the top property because it was the most viewed home on the website last week. The address is 19 Billabong Drive, Crestmead. The home is unlivable and the real estate agent clearly has a sense of humour. In South Australia, the top property is 62nd Street, Brompton. This cottage is just to the north of the Adelaide CBD, has 2 bedrooms and 1 bathroom. And in the ACT, the top property is 68 Duffy Street, Ainslie. This 3-bedder comes with 2 bathrooms and parking space for 2 vehicles. And the most viewed home on the REA Group website this week, it is that Queensland property we just showed you a second ago. So the second most viewed is 100923 Albany Highway, Williams in Western Australia. This acreage is nearly 2 hours drive southeast of Perth. There are 2 homes on the property. One is a 2-bedder, the other is a 1-bedder. Both come with large garages. The single-bedder is currently tenanted at about $350 per week. There's 83 acres of land with orchard trees, paddocks, sheds and water tanks. The land's being used to run sheep, and the sheep can be included for the right price. The agents are accepting offers over $799,000. And for more on property, I caught up with Cameron Kusher from REA Group a little earlier.
Well, we're seeing auction clearance rates, particularly in Sydney and Melbourne, holding pretty steady, and both of them are comfortably higher than they were 12 months ago, particularly in Sydney. And we're now starting to see the volume really ramp up. We've got just under 1,000 auctions this weekend in Sydney, and we're looking at about 1,650 auctions this week in Melbourne. And it really talks to the fact that a lot more vendors are bringing their properties to the market. And obviously a lot of those vendors are utilising auction as the best method to get that property sold.
Yeah, how much stock is there right now, say, compared to the same period last year?
Well, if we look in Sydney, the number of properties going to auction is up about 45% compared to the same week last year. If we look in Melbourne, it's up about 170% from the same time last year. So it is a significant increase. And if we look more broadly at the markets in Sydney and Melbourne, new listings are significantly higher than they were 12 months ago. And I guess it speaks to the fact that vendors have once again got confidence to bring their properties to the market.
Yeah, did you expect the property market and property prices, for that matter, would recover as quickly as they have?
No, and I don't think many people did. We were anticipating that this year we would continue to see prices fall, and the main reason for that was interest rates were still falling. We'd seen borrowing capacities reduced significantly, and we knew as there were further interest rate hikes, that capacity would reduce further. But also, we were probably expecting more stock to come to the market sooner. And if we look back to late last year, the volume of sales was very low, and we expected that that was going to continue to decline. But none of that really happened. We got to the start of this year, there was a jump in the number of properties transacting. We saw more people trying to buy, and we saw that volume of stock available for sale continue to remain really low. And that really just meant that when there was a good property that came to the market, there was a lot of competition and there wasn't really a lot of scope for people to negotiate a cheaper price. And that's really contributed all of those factors to the strong increases in prices we've seen this year.
All right, so about 3,600 homes being auctioned this week. What's the outlook like in the lead up to Christmas? Are we expecting similar sorts of numbers?
We're over the next couple of weeks, we're looking at quite strong numbers in terms of preliminary numbers going to auction. We do tend to find that the peak in auction volumes is often the last week of November or early the first week of December. So I think we're going to continue to see quite strong auction volumes over the coming weeks.
What about the outlook for interest rates? Because we have had those CPI numbers out this week. Is that there's potential the RBA may lift again in November? Will that have any impact at all on demand for property?
I don't think so. I think because we've had 4 months now where interest rates have been unchanged, I think there's a pretty clear signal there that interest rates are close to their peak. I personally do think that we will get an interest rate hike next month, only 25 basis points. And then there is the potential for another interest rate hike in December, but I think that one is less likely. But I think the only thing that it might do is actually make it a little bit harder for some people that have mortgages, and maybe that might even encourage a little bit more stock to come to the market. But overall, I don't think another 25 basis point increase in interest rates dramatically changes what we're seeing in the market at the moment.
This week, Reserve Bank Governor Michelle Bullock spoke before Senate estimates, and one thing that jumped out to me was she doesn't expect rents or inflation from rents to peak for another 6 months. So do you agree with that view that rental market we know is tight, but it sounds like, according to Governor Bullock, that it could actually get even tighter?
Well, we've seen advertised rents stabilise a little bit over the last 3 months. Now, we do still expect rents to grow from here, particularly in the major capital cities, but not necessarily at the same pace. We do know that CPI rents do tend to lag advertised rents somewhat, and we have been seeing double-digit annual rental growth in advertised rents for a number of months now, probably more like 6 to 12 months now. So I wouldn't be surprised at all if we do see a further escalation in CPI rents over the coming quarters. And as Michelle Bullock said, 10% rental growth would be the strongest rental growth in CPI rents since 1989. And it really talks to the challenge that renters have in the current market.
Another inflation input was the increase in property prices. And just talk us through the outlook for property prices over the next few months.
Well, in the CPI, the property price, I guess the measure you get there is the cost of brand new housing. And that has increased quite significantly over recent years because of shortages of trades, but also because of the cost of materials. Now, we did get on Friday, producer price indices data, and it showed that the cost of materials that go into residential construction were actually unchanged over the quarter. So some of those pressures are easing in the new housing market. If we're talking more broadly about our outlook for housing prices, we've already seen evidence that price growth has slowed a little bit over the last few months as more stock has come to the market. And we still think prices are going to rise, but don't be surprised if we see that rate of price growth slow. And that's largely just because, particularly in the two largest capital cities, all of a sudden people have a lot more choice of properties to purchase because there is such a large volume of stock hitting the market.
Cameron Kusher from REA Group, thanks for coming on the show.
Thanks, Ed.